We're going to just talk about pricing your house, setting terms, how to do things the right way for a seller finance transaction to make it successful for you. And this ain't no joke. So if you like the video, guys, take a minute and like it, please. Don't forget to subscribe to our YouTube channel and make any comments. We'll do our very best to get back to you on those as well. So, when you're looking at selling a home with seller financing, if you're talking to a realtor, they think you can only sell a home for what the house would appraise for, or comp at, as they would say. They will only put an interest rate on there based upon what maybe market rates would be, or even something lower than that, because they simply don't understand what they don't know. When I'm pricing a home for seller financing, I'm going to start with market value, and then I'm going to add on to it. What am I going to add on? Well, I'm adding on financing fees that I don't have that a cash buyer would have through a mortgage company. That could be anywhere from 2 to 4 to 5% maybe. Title fees could be added in there that probably may or may not be associated with this transaction. And all these little things help add to my percentage. To the buyer, it's the same thing. Whether they pay 3, 5, 7% in fees, this, that, whatever it might be out there, or they buy the house for 107 cents on the dollar, it's the exact same thing for them. Except their down payment now is going to go towards the purchase price of the home, not to fees to some third party. Maybe there's less marketing fees, less this fee, less that fee. But normally I look at this, and based on the dollar value of my property, I'm going to increase my sales price for those various reasons. For instance, if I'm selling a home that has an appraised value of $200,000, in my mind, I'm starting at $219,900. But based on the house, the market, interest rates, the neighborhood, that might be $214,900, it might be $209,900. Every deal's a little different, and it's the feel is what you kind of look at along the way. But you have to look at that from also a pricing structure to get that payment down just right. That, based upon what the borrower's loan balance will be, based upon their interest rate, their taxes, their insurance, how does that work for the marketplace out there? But you've got to get a feel for that to get your pricing set right. You don't just go with the traditional stuff of market value is the most you can pay, because I always ask this simple question. That is, what is any house worth? Simple answer, it's worth what someone's willing to pay for it, within reason. Can you take that $200,000 house and sell it for $300,000? Well, you can try. It's probably going to sit there from now until the end of time, right? So it has to be reasonable within the scope of the neighborhood where it's located, the market you're in at the time, all these variables that you have to look at to make that final decision. And there is no cut and dry answer to that that's out there. Again, I find it interesting. Most of the homes I sell have been fully renovated and are very nice. But I've also sold a ton of houses that I haven't touched. I've sold houses that have foundation problems. I've sold houses that have the commode sitting in the middle of the living room. And I could go on and on with what these things are. And you adjust that sales price based upon repairs. For instance, again, maybe you have a home that you would spend $50,000 on renovations. Maybe your sales price for that house is going to be $250,000 if you renovated it. Got it. Well, if you're going to spend 50 grand in renovations, could you market the house for $199,900? Yeah. 250 minus 50, again, 199.9 or so. Okay. Now, is that dollar for dollar? Certainly. Why would I do that? Well, I want to see what the market is going to respond to me at that price for that home. Maybe that home buyer I'm talking to could be a contractor. I don't know. Maybe they have a lot of family or friends who are in that business, where instead of spending 50 grand like I would spend on that house, they may only spend 20 or 25,000, and they get 25,000 off the price because they're able to go in and do the work themselves. You won't know those answers until you test the market, and the market will resoundingly tell you if you're too high or just what. because everyone's going to tell you this. And when you get enough feedback, you know I need to adjust my sales price along the way. The next thing to do is, what are the terms of my transaction? Once you get that sales price kind of in line where you want to go, what's the interest rate I can charge? What's reasonable? And again, this is one of those things that there is no definitive answer for. Now, obviously, I want to know, what is the current market rate? What's a bank charging out there versus what's a mortgage company charging? What's a DSCR lender charging maybe? And get a feel for that. For instance, if the traditional mortgage rate might be 7%, let's say, is it reasonable for me to charge maybe 8, 8.5, 9%? Maybe. Could I charge higher? Maybe. But as your house gets more expensive and you are running your numbers, that payment gets more expensive rapidly. In fact, interest rates are kind of logarithmic in nature, meaning they kind of go like this a little bit with that payment. Simply put, at some point, you're going to price yourself out of the market. Now, on lower end homes that are maybe in that 150 price range, could you charge a little bit higher interest rate? Yeah. Why? Because the monthly payment is going to be a little bit lower than 250 or so. And you have to look at, again, what are apartments in that area going for? What's a 1 bedroom, 2 bedroom, 3 bedroom going for in those areas? And get a feel for those kind of things. So you're able to look at, what is my PITI, principal, interest, tax, and insurance payment, and how does that compare to other houses for rent in the area, to other apartments in the area, whatever it might be. I always find it interesting in the real estate business when you're looking at those kind of decisions. And you ask things like, well, in the commercial world, why is an apartment complex, why do they build those with 70% 1 bedrooms, they have 20% 2 bedrooms, and 10% 3 bedrooms? Well, the bottom line is you can get a lot more money per square foot for the 1 bedroom than you can for the 3 bedroom. Same way in the marketplace also. The larger your home, the smaller the dollars per square foot you get versus the smaller home. It's just the way things work out there. So you're taking an initial number. And for instance, in my business, we start with a 9% rate. And I see how that works for that property at the sales price I decided to sell it for. Now, I've got a down payment in my mind, what I want to get. So I've got a loan balance I'm looking at. I've got my interest rate, what are my property taxes, what would my insurance be, and I've got a monthly payment. And this is where kind of the guesswork comes in just a little bit. You look at that final number, and how does that number feel for this home in that condition that it's in? How does that number feel for other homes in the area? And if someone came in and got a mortgage, let's say, as I said earlier, at 7%, what would that look like versus my house too? And you start massaging these numbers. Again, there's not a set rule. Every deal is different. As your house goes up in value, maybe if you have a 150 priced house, you could get a 10% interest rate possibly, maybe a little bit more based upon things that are going on in the market. $200,000 house, maybe you can get that 9.25 rate, 9.5 even. $300,000, well, that's going to be dropping a little bit more, maybe 8.5 or 9% interest rate. $400,000, same thing, because the monthly payment at these higher interest rates gets so out of line, people can't afford it. And if you price yourself out of the marketplace, guys, no one's going to look at it. And so you've got to kind of massage it and get those feels going a little bit to make that decision. And as soon as you set these pricing structures, your sale price and your terms, you have that monthly payment, the marketplace is going to give you feedback. Either your house won't get shown at all, or they're going to tell you it's too high, too pricey, too this, too that. When you hear all these things, you start making your adjustments from there. And that's how you set your pricing out there. There's not that definitive rule. And I get these phone calls all the time going, what would you do? What's your price? And it's like, I don't know. You got to do all of this homework to make the proper decision along the way. Another thing you got to look at that is so important too is your down payment. Now, one thing I learned a long time ago is that there is a direct correlation to the quality of your home. That can mean the finish out, the condition, the neighborhood, the down payment, and how you processed or approved your buyer to your payment history. And what we learned simply is that the better the quality of your home, the more skin in the game your buyer gives you, and the better overall environment of your home and the area and how you qualified your buyer, they're going to be a pretty good resident for you. And for the most part, they're going to pay timely, which is what you as the investor really want out there. Uh, those are the kind of things also that gives your property and your mortgage you're carrying back value. When you've got a good buyer with a reasonably good down payment who creates a good down pay history because you have provided them a good product, it makes your mortgage and that property much more marketable should you ever be looking to sell your mortgage along the way. And you've got to, again, work these things out. One thing I've also learned when you look at the marketplace is, just like I said with apartment complexes and whatnot, about 70% of our marketplace has a good 10% down payment. 20% of the market has between a 10 and a 20% down payment, and about 10% have something greater than that based upon where the property is and where they're looking to buy. Yeah, there's always anomalies you can find along the way, but that seems to be a pretty hard and true rule that we've experienced for the last 30 years out there. So what I mean by that is if you go into a deal and you say, I want 20% down, period, or nothing, you might be sitting on that deal for the next 6 or 8 months before you sell it. Well, one thing you've got to think about, guys, is that every month that house sits vacant, it's costing you 1% probably of your interest carry, taxes and insurance, yard keep up, utilities, things like that along the way. So there's always that trade-off you got to be thinking about. You can't just say I'm going to do this because you may sit on that home for quite some time. So thinking through your marketing of this property from a sales price perspective, how do I equate my down payment? What am I looking at? And we all want, more is better, right? But sometimes you just can't get it based on the market you're in. Sometimes you can. And then what's my interest rate, my term? Is this going to be a 30-year mortgage, 20, 15-year? Can I give my buyer those options? Certainly you can. Can they make extra payments? Yep. They can do all those kind of things. It just simply helps you structure that deal properly. And when you put all of that together, that monthly payment, you massage it to the neighborhood where you're located, what's going on in that neighborhood, pricing wise, days on the market, rentals in the area, etc., you're able to get a pretty good structure for your property. And you get a good starting point. And from there, you make adjustments about every 2 to 3 weeks based on what you're hearing from people who are calling in, marketing reps, whatever it might be along the way. But let's take a minute also and just talk about marketing. How do I find buyers who do this? Traditionally, most people go to realtors to do this. When you go to a realtor, you might wind up paying a 3% fee to that realtor to bring you a good buyer. Is it worth it sometimes? Absolutely it is. There's never a wrong time to get a good buyer in place. It's just what's going to be the best. We like to use Bandit signs in the yard. No, for sale by owner, easy qualifying, a phone number. Maybe if you're in a Hispanic area, you can put various words like owner to owner or dueño y dueño. Great. Um, Asian neighborhoods, same thing. You can come up with what works the best. We put directionals around our neighborhood. We kind of put out other signs in high traffic areas to direct them to our home. One thing I like to talk about is, if you walk by a house or drive by a home and you see a realtor sign in the front yard, we all think two things. Hey, the house is for sale. Obvious, right? But you also go, well, most likely I need cash. That's a mortgage or real cash to buy the deal. Well, if you already know you can't qualify for a mortgage because maybe you've talked to a mortgage company, you ain't calling on that house. On the flip side, you put that yellow sign maybe out in the yard, out by curbside that says for sale, owner finance, easy qualifying. Now, if I drive by that same house, I might now make those phone calls. And I will tell you with 110% certainty, it works just like that. And the phones blow off the hook all the time because there's a whole lot more people out there who can't qualify for a traditional mortgage than who can. So you're aiming for the masses along the way. So Bandit signs are a great tool. Your various Facebook marketplaces are a great tool, whether you run these things on various marketing groups. If you're trying to target a Hispanic group, there's Hispanic meetup groups you can target on. I'm sure there are Asian, all other types out there, houses for sale that you can market these things on to get buyers out there. And then you could put it yourself out online through Zillow or Realtor.com or things of this nature, basically. You can also find other marketing reps who specialize in seller finance. One of the things I have done historically as I drive through neighborhoods, I see signs like this. And because I'm in the industry, I see these more than if you're not. And I might see a for sale by owner sign, et cetera, has a phone number. Well, I don't know if that's the actual seller selling the house or is it somebody who's helping the seller. So I just take the time and I call to find out about it. Maybe I get a chance to market and see what they're selling in the area. And if it is a marketing rep, maybe they want to sell my house too. I don't know. But I take the time and I've learned to do that. And I've trained myself whenever possible to do those kind of things to help develop leads along the way. So guys, when you learn all of these nuances about putting a sale together on a seller finance home, how to look at it from a sales price perspective, terms, marketing, what's my down payment, all the variables that really happen in real life, it'll help you get your deal ready to go. Now, one last pointer that I like to do is I like to put in my windows of my homes for marketing just a simple yellow or hot pink letter that has the property address at the top. Maybe I define the property a little bit, 3-bedroom, 2-bath, 2-car garage, 1,800 square feet, central heat and air, whatever it might be, fully updated, something like that simple. Maybe I put an asking sales price, an asking down payment, an estimated monthly payment with taxes and insurance, and then for details, call. Why do you do that? Well, hopefully it stops the tire kickers. I don't want somebody, if I'm asking for a $20,000 down payment and they got $3,000, I probably don't want to talk to them. If the monthly payment in this house is $2,500 a month and they're currently paying $750, do you really think they can afford that house? Probably not. And so if you want to be able to show them that there's a reasonableness out there and there might be flexibility in terms within reason, but it helps to prevent some of the tire kickers along the way. If you do all these kind of things, guys, I think you'll find it to be very beneficial in helping you structure and market your homes for sale out there in the owner finance world. So guys, I hope you found this a little bit beneficial and helpful in marketing your homes. If you did, take a minute and like the video, shoot over and join our YouTube channel. Make any comments below. We'll do our very best to answer those for you. And guys, we'll see you all next time.